Welcome to S&P's European Loan Market Video Overview, detailing leveraged finance activities and trends during September 2012. I'm Suchit Gupta, a member of S&P Capital IQ's Leveraged Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for October and early November 2012. Before we start, please know you can follow LCD on Twitter, Facebook, and you can join the almost 9,500 contacts in LCD's Leveraged Loan Group on LinkedIn, as well as leveragedloan.com, a free website promoting the asset class. The links to our new website and to follow LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. The European leveraged finance market started off in all cylinders as the market returned from their summer holidays back to their desks re-energized by the ECB's policy actions. Loan issuance went to 2.3 billion euros from 1.1 billion seen in August. High-yield issuance shot up to 7.2 billion euros from 1 billion seen in August. According to JP Morgan High-Yield Research, positive fund flows, almost 2.3 billion of inflows into high-yield accounts from the beginning of the year. Secondary markets, however, are up nonetheless. A point of concern, however, are default rates, which have gone up during the month. Focusing on the secondary loan market, this chart details the average price of LCD's European loan flow name composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. Secondary loan prices rose 15 bips to finish the month at 95.75 and 102 bips for the third quarter. This next chart details the average price of LCD's European high-yield flow name composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. The high-yield market finished the month up at 98.72, up 102 bips for the month and 481 bips for the third quarter. This chart details the monthly return of the LE, a broad measure of the European loan market return that LCD calculates. All returns are ex-currency unless otherwise stated. The European loan market had a positive return of 0.63% for the month of September through the week ending 27th of September 2012, down from 0.86% seen in August 2012. The total LE return for the first three quarters of the year is a positive 7.33% versus a negative 1% for the same period last year. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. September saw European monthly loan volume jump to 2.3 billion euros from 8 deals versus 1.1 billion euros from 6 deals seen in August. Year-to-date new issuance for loans through the end of the third quarter now stands at 20.4 billion euros. High-yield issuance in September was a whopping 7.2 billion euros, the third highest monthly read since LCD started tracking high-yield issuance back in 2006. Year-to-date high-yield issuance now stands at 27 billion euros. The default rate by principal amount moved up to 6.2 at the end of September 2012, up from the 5% seen at the end of August. Meanwhile, the default rate by issuer count is now up at 8% at the end of September, up from the 7% seen at the end of August. Themes to watch for going forward. No changes to the quantitative easing policies from the ECB. This should drive greater inflows into high-yield bond funds on the back of interest rate cuts, as well as, more importantly, the tentative stability of the secondary markets. A to ease and meant to extend to continue as issuers seek to address their maturity concerns, though the issuers that are going to be coming to the market are weaker. Bond for loan takeouts to continue, perhaps even increase, as stability returns to the high-yield markets. Peripheral issuers, i.e. issuers from Eurozone peripheral countries, will seek to access the high-yield markets, especially given the stability in those markets. Given the strong technical demand for loans and the dearth of new M&A, sponsors will look to tap into this demand for recapitalizations and, if possible, repricings of existing loan transactions. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for the other video analysis of the leveraged finance market, including U.S. loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.